Canada specifically is a very trade-oriented country. Around 75% of those are going exclusively to the United States. When the US does well, would be positive for growth in that short run. But maybe let's hope that the bark ends up being a lot worse than the bite when it comes to where we're going to find ourselves.
Welcome to The Few Line, where we explore all things automotive with a focus on mergers and acquisitions. Hi, my name's Fareed Ahmed. I'm the founder and the CEO of DSMA and your favorite podcast host. Each episode, we connect with influential figures that drive the automotive landscape. Let's shift into gear and get started. Today, we're lucky to have my friend Erik Johnson here. Erik is the Vice President and Senior Economist at BMO. Erik is a leading expert in macroeconomic trends, that's a mouthful, financial markets and their implications for the automotive sector. Welcome, Erik.
Thank you so much, Fareed. It's a pleasure to be here, as always.
Always great to have you, and you do an amazing job with BMO, so thanks very much for being here. So let's get into it.
All right.
Give the audience a 5-minute overview on yourself.
Sure, absolutely. So I don't know if I have the same cachet of, stumbling into my current role, on the way home from surfing as your last guest.
Right.
But I will say that, it is kind of a role that, I didn't necessarily traverse to with, kind of one direction. I actually started my career in the public sector.
Did you?
And got a little bit bored, kind of pushing paper at Treasury, and so decided to go back to grad school. And I guess what in grad school is doing something that I would say is probably auto adjacent. I was looking at the effects of kind of the early highway programs in the United States on urban development, on population, and actually joined BMO originally as, I guess, what qualifies as a glorified computer programmer. I was working in credit risk, kind of on modeling there and that kind of thing. And it just turned out that at some point in the last several years, BMO had lost an economist, and miraculously, our former deputy chief economist asked me out for coffee one day and said, "Hey, I'd really like to hire you." And that's sort of how I found myself in this role. But I think what's maybe a little bit unique about BMO specifically, and maybe what we try to do with our sectoral coverage is, that you can certainly read flashes by some of the other economists out there when there's an update to global auto sales kind of at the end of, every month or so. But what we really try to do is work, hand in hand with our dealer finance team to really get more of that kind of on the ground perspective and, provide both them and our clients with, some of the macro trends and, some of the things we're seeing in the sector that one, they might want to be concerned about from a risk perspective, but also, what kind of opportunities are going to be out there.
Fantastic. So you're the brains behind BMO.
Some of the time, yes. I like to think that way. But, I think in times like these sort of, we're certainly humbled by, trying to understand things that are certainly both complex and a little bit unpredictable, but absolutely.
So as we always do, we ask our audience to suggest some questions, and I've got a few here. So if you don't mind, I'll ask you the first question.
Let's go for it.
So the first question is actually from somebody from Alberta, actually. And it says, what do you think about the macroeconomic trends and the automotive industry, let's say over the next 2 years?
Yeah. So, I think what we're seeing happen in, the automotive space is certainly mirroring what's happening in the broader economy, particularly in a country like Canada, where we've seen, the effects of higher interest rates really play out sort of in quite a negative way on, anything that's a little bit more linked to discretionary spending. Just, we're a very high household debt economy, and, we brought on a lot of that debt when rates were ultra low. And, I think at no fault to anyone, because, if you go back to what, kind of Governor Macklem said in the early days of the pandemic, he basically told everyone, rates are going to be low for a very long time. It turns out that wasn't the way the reality played out. They, were not that low for very long. In fact, they got, meaningfully high, hitting kind of 5% on the overnight rate. And so I think, affordability is really the watchword that's driving both the broader economy, but certainly the automotive sector. So what we're starting to see now is, after what you could arguably say is probably the best 2 to 3 years of all time for sellers, is the market's pivoting a little bit more back to buyers as inventories are kind of normalized or even piling up, certainly above what we even saw 2019. And so I think that's shaping the conversation of, what a consumer is, coming into a dealership thinking about, right? If the last time they bought a car was maybe in 2017 or 2018, they have this kind of anchoring number in their head of, when I bought my last car, this is what my payment was.
Right.
And so they go into a dealership today and they say, hey, guess what? That payment is now $500 more a month.
So they're getting sticker shock. Truly.
Absolutely. And so I think for the first time, and this is, pretty unique in the North American context for the last 15 years, but certainly in 2024, we're really seeing consumers start to trade down on size. And I think that's all just about the arithmetic of affordability, right? Consumers, certainly still need to go out there and replace their old automobile or get into something that's, more favorable for their current lifestyle. But the arithmetic still needs to work. And so I think we're really just, continue to see that play out where, until kind of income catches up to where new car prices have gone, or even used car prices for that matter, there's going to be that shift towards, searching out for models that are a little bit more affordable. It's one of the reasons why, both subcompact and compact SUVs are having, such a strong year this year.
Numbers, yeah.
And whereas large pickup trucks are certainly, for the first time in a long time, not having a great year. And so I think that's a trend that we're going to be, is going to be with us for the next several years. And so from a brand perspective, right, brands that are a little bit better positioned in that, maybe higher volume, lower margin kind of framework are probably going to be positioned a little bit better than, I guess what we'll call sort of the upside down pyramid that some brands had shifted to where, we're trying to sell all of our expensive vehicles and, not really putting much kind of attention onto those, lower end, lower trim models that are, certainly right now really taking off.
Sure. So looking into your crystal ball, and this is a question from a dealer in Toronto. I think it's the question that is on everybody's lips, whether in Canada, the United States, or globally. Where do you see the interest rates going in the short term and the medium term related to the automotive industry?
Absolutely. So I think the good news, if I'm a dealer out there, certainly one of the things that's really been weighing on my business in the last year or so is, inventories are starting to creep up for the first time. And so, in a world where we were at normal interest rates, that would still, raise some eyebrows, certainly from the finance department. But now certainly every CFO of a dealership group is, either telling the sales team they have to move some product or certainly being a little bit concerned about kind of what's on their book because, higher inventories at the same time as when interest rates were higher, we're certainly weighing on, a lot of the margins that you are earning on that side of the business. And so the good news is certainly in the Canadian context, with the, generally the economy being still, I would say moderately weak, right? We're barely growing at, a little bit over 1%. Certainly it's probably going to pick up as we head into the end of this year and 2025. But in that kind of environment, the Bank of Canada is likely, in our view, going to continue kind of cutting interest rates. So I will say that in an environment where, there's a little bit more uncertainty, maybe a little bit more upward inflationary pressure from the incoming administration in the US, maybe we'll see a little bit of pause and delay. But in our view, the policy rate in Canada is still going to be around 2.5% by September or so of next year.
Really? Okay.
Again, that's a huge relief when we think back to, it was certainly at 5% for much of the last year or so. And so that's incrementally going to matter. I think if we, kind of change perspectives and think about where some of the longer term interest rates going to go, I think that's a little bit more challenging just because a lot of the good news is already priced in.
Right.
So I think you'll need something to change in the dynamics to get, long-term rates to move anything close to that, roughly 125 basis points or 1.25% that we're expecting the short end of the curve to move over the next year. Now, what that means is if I'm out there trying to buy a new car and I'm looking at the financing costs, yes, they're going to go down, but they're maybe only going to go down by a little bit over the next year as opposed to kind of that dramatic, improvement on the cost side we'll see for dealerships. So, that certainly will temper, how much extra demand we'll get as the economy kind of picks back up in Canada. But I think the thing to think about there is, on those longer term rates, really what's tying them down now is, there's about 100 basis points or, 1% difference between US and Canadian long-term rates, basically across most of the maturities. And so unless US rates kind of come down in a meaningful way, Canada rates are a little bit stuck, right? So again, if I'm a bond trader and I see this big gap in rates, it's very easy for me to arbitrage kind of that away. And so that's a little bit of the dilemma we find ourselves in. But I'd say certainly a good news story for, what we've been through both on a consumer side and a business side over the last, 2.5 years or so.
So we have a question from one of our American audience, and this is a very polarized question, but they are asking, how do you see the Trump regime affecting North American trade?
Yeah, absolutely. So I think, the big risk, and we saw some flashes of it this morning or even really overnight, is that, tariff is that naughty word that's going to come in the automotive sector. And if you want to think about why, is, Canada specifically is a very trade-oriented country. Exports are about 30% of our gross domestic product, and around 75% of those are going exclusively to the United States.
Right.
And so, if something were to happen, say on Inauguration Day, as Trump's latest kind of social media message pointed out, that all of a sudden everything we ship to the US would be, subject to a 25% tariff, that would have kind of a dramatic effect on the Canadian economy. I think we saw a little bit of marginal movement in the FX markets in response to that. The Canadian dollar kind of briefly creeped up above, 141 kind of US there. But again, I think that's only really a flavor of what would actually happen if we had something like that. And I think what you want to think about from the industry's perspective is automotives are this kind of challenging industry from a global trade perspective, and especially a North American trade perspective, is that we don't really deal exclusively in finished products. Right. It's not like we build cars in Canada, we sell them directly to consumers in the US. Often what happens is, we assemble auto parts, we assemble chassis, we assemble engines. Some of those things are put on, partially assembled vehicles, or just the parts are shipped to the US. And so you have a lot of this back and forth trade. And so all of a sudden, if we're adding a tariff every time these things are crossing the border, it really would have a dramatic effect on price. And certainly if affordability is already charged, imagine what would happen kind of to new car prices, just to overall kind of inflation in that kind of environment. So again, I do think ultimately there's, sort of this stronger, I should say, like brighter minds kind of will prevail here, because again, it's not just the Canadian economy that's going to suffer in that case. What we'd see is, US consumers would be paying a lot more for their vehicles too. So I think that would have too much of an appetite if it ever came to fruition. But that's the key risk. I will say, there's certainly some opportunities here as well. So if we think, on the corporate side, if, the new Trump administration is really going to narrow in on, kind of deregulation, cost competitiveness, lower corporate taxes, that might really spur a fair bit of activity on the M&A side in the sector. Would really kind of open up some potential avenues for growth even up north. Because I think it'll also tilt the conversation maybe a little bit up here, which would be a good thing to, what kind of policies in Canada can we, start to pursue to make us a little bit more competitive? Because that's going to be much more of a concern in an environment where your neighbors are really, kind of cutting corporate taxes and, certainly doing things that would be, attractive of business investment in a way that we wouldn't want to disadvantage ourselves to. So I think, again, when the US does well, and certainly in the short term, a lot of the policies that the Trump administration has talked about would be, positive for growth in that short run. That's something that generally, shines back onto our country as well. And so again, yes, there are risks, but there are also potential upsides. Okay. And again, if there's one word certainly that people will need to keep in their back of the mind is, expect a little bit of chaos, expect a little bit of uncertainty. But maybe let's hope that the bark ends up being a lot worse than the bite when it comes to where we're going to find ourselves.
So another question, actually, this is from an Niagara Falls dealer. Is it the right time to sell your business as a dealer, or is it the right time, do you think, to buy?
Yes. So, I think to give a quintessential economist answer, it depends. But I think, if we're to wait maybe where we've come from to where we are today, we were probably in one of potentially the best times to ever sell a business over the last 3 years, just in terms of what we could earn from a multiple point of view if we could convince the buyers that our 2021, 2022 multiple was the truth.
Yeah.
So I think, when we reflect on that, we are moving into an environment where, lower interest rates mean getting a deal across, kind of the table is going to be easier to pencil from a financing point of view. So that's generally going to make it more favorable from an M&A point of view. But then, I think valuations are slowly kind of creeping back to earth in the sense that,
We're seeing that.
Yeah.
We're seeing that.
So if I own a Stellantis dealership and maybe I'm finding it a little bit tough right now, maybe I'm not holding on to the idea that my 2021 or 2022 multiple is the true number I need on Blue Sky. And maybe I'd be willing to accept something closer to what that Blue Sky was available to in 2019. And so I think from that perspective, there will be more opportunities where, if I'm someone who has a lot of dry powder out there, it's just going to look a little bit more appetizing as opposed to feeling like I'm really buying at the peak. And listen, if I'm buying a Toyota dealership or I'm buying a Subaru dealership, no problem. I'll buy at the peak, 10 times out of 10 every day of the week. But for some of those other things, I think those opportunities are going to be there. And I think where we find ourselves, particularly in the US, is, there's still a lot of dealership groups that are relatively small, might have an owner principal who maybe is getting up there in, the latter stages of their career. And if they were thinking from a succession planning point of view, what kind of things should I could do, then, certainly pursuing a sale, in the next little bit, I think will be a little bit easier from how much buyer appetite there will be. And I think that's, where there is more opportunities. Because again, I think we've already seen this, certainly the big urban markets in Canada, and we're seeing as well in the US, but just as this industry kind of continues to move forward here, the returns to scale in both generating leads, finding organizational efficiencies and improving kind of the overall, service and fixed op possibilities, I think is only going to keep improving in a more digital and, data-driven environment. And so I think that is really the big, medium to long-term case of why these transactions are still going to make sense. So again, I think because of where we were to where we are now, it is a little bit better, I think, going forward from an M&A perspective than where we were. Even if certainly if we're just talking about what the deals we're closing at, obviously, they're not going to be closing nearly as high as they were.
So I've got a question, actually, a very interesting one, very relevant, from a private lender in Houston, Texas. And I think their question, what they're asking is, how bullish is BMO in North America on the M&A side in the automotive industry? Are you guys still enjoying it? Are you guys looking at some challenges down the road? Where does BMO, do you think, in general terms, I'm not going to hold it, you're not the CEO of BMO, but in general terms, what does BMO feel right now? Are they bullish on the industry?
Yeah, I mean, I would say reflecting on the last year or so, I think what we saw was a little bit more of a challenging environment to see, a lot of interest in that kind of thing, just in terms of, if I wanted to go borrow money to buy something, it was relatively expensive for me. And at the same time, I was still probably paying higher valuations. So I think, going forward, from just a fundamental point of view, a lot of things are tilting the economy in a little bit more favorable of a direction. So in the Canadian context, interest rates are coming down.
Right.
It means broadly speaking, probably consumer discretionary spending's going to be a little bit stronger as we head into the next couple of years here. So I think that's, generally an environment where you'd expect, more of that activity to take place and just to be, for the arithmetic to make a little bit more sense than it did, kind of in the latter stages of 2023 and certainly in 2024. So I think that is certainly, maybe a lean in the direction of maybe being a little bit more bullish. But again, I think both the challenge and the opportunities of the election that just happened, with our neighbors south of the border there is the sort of the spectrum of potential outcomes is wider than it's ever been, right? So I think, there are more kind of bigger tail risks than there would have been otherwise, but there's also potentially bigger upside risk as well. And so I think that's the one thing you do have to be a bit more cautious about is, you don't necessarily want to, just focus on the upside there. And you have to kind of think about what are some of the contingencies if I'm going to, really lay a lot of capital out on the line there of, what could go wrong. And so in that situation, would I still be okay? And so I think that might be the air of caution I would carry into any of these kind of conversations going forward. But again, I do think, we're heading into an environment where there are going to be some really great opportunities in that space.
Erik, as always, you're a fountain of information and really appreciate you making the time to speak today. One last question, silly question. A dealer in Toronto says, what car do you drive and are you ready to trade it in yet?
I mean, I guess it depends what the price point is.
What the deal is, right?
But, I will say, you have to remember I'm an economist. So the car I drive is certainly one that is going to get me from A to B, but it's a Mazda.
Okay.
And I certainly always have loved that style of car where,
Beautiful.
again, certainly not the flashiest of cars, but, the fuel efficiency is great and, it doesn't necessarily, set the wallet back too much. But I think any economist will tell you they always get nervous about spending too much money on a vehicle because, they know the moment they drive it off the lot, it's not quite worth what they paid as opposed to, if I get to buy an asset that might, certainly retain a lot of value. But I think the bottom line is, in my day-to-day life, you need a car pretty often. And certainly even with all the traffic in and around the GTA, it's still a pleasure to drive when you don't have to sit in rush hour all the time.
Well, Erik, again, thank you very much. As normal, you're a humble guy. You're a brilliant guy. You're sought out to speak at many conventions and conferences. And it's obvious why. Keep doing what you're doing, Erik. You're doing a great job. And thank you very much for joining us.
Absolutely. Thanks so much for having me, Fareed. It's always a pleasure.
Thanks for tuning in. And don't forget to like, share, and subscribe. My name's Fareed Ahmed. See you next time on The Fuel Line.